crude markets. After making a strong start for the new year, crude oil has extended its gains into yet another week. Prices hovering near 2.5-year highs, actually. Let's discuss what the outlook for the crude markets is. Azlin, the editor of crude oil markets at Argus Media, joining us on the phone line from Singapore. Azlin, good afternoon. Thanks so much for taking our call. Azlin, what have been the factors at play in the last week or so on the crude markets which have kept prices elevated?
Well, I think that one of the things that has kept prices high is just the concerns about the Iran situation, just the protest in Iran. And so far, it has not affected any production. But obviously, Iran being a big OPEC producer, it's something that the market will watch very closely. The data also shows that the OPEC compliance in December was very high. It was total for OPEC compliance to the output cuts was, I think, more than 150%. So that really gave the market a bit of confidence that the OPEC and non-OPEC producers are serious about keeping their production low so that prices don't fall. So I think those were some of the big factors that kept prices well above $60 for Brent.
What about U.S. inventories, Azlin? Is that sort of counterbalancing force for the market right now?
Well, the U.S. crude inventories have been falling for the past 5 to 6 weeks. So that has also helped, keep prices high. But with the U.S., production continues to rise. And there's always the danger that if oil prices really shoot even higher, that there will be more incentive for the U.S. producers to increase production even more. So that will always probably put a bit of ceiling on oil prices because, and the higher oil prices are, the more that U.S. producers will probably want to increase their output.
Brent is currently trading at about 68.5. When you speak to market analysts, what's the sense that you get? Is this going to be at these levels at least for the next couple of months?
Well, our view is that overall, on average, we do see that Brent will be a lot lower than where it is now, and that we do see the average for ICE Brent in the first half of 2018 around $60 or just slightly under $60 a barrel. And the reason for that is first quarter is usually typically when crude stocks start to rise. So we'll have to see what happens. There's been some output disruption in the last month with the 40s and the temporary Libyan pipeline closure because of an explosion. So those were also factors that I think push prices significantly higher. But once all those factors are resolved and production comes back to normal, I think that we're going to see prices start to ease off from these high levels that we are seeing right now.
Azlin, what is the range that you're hearing from people you speak to, traders, etc.? Even on the downside, I know currently we're only talking on the upside, but for 2018, what are the kind of numbers that people are talking about, both Brent and WTI?
Well, I don't think at the moment people are not so much looking at the downside. Basically, but it all hinges, I think, in terms of the downside, it hinges on the OPEC compliance because the OPEC compliance in 2017, OPEC and non-OPEC led by Russia was actually very high and much higher than the market had expected. Now, assuming that this continues at least into first half 2018, we should not see prices fall below $50 for ICE Brent. I think that if we see the cheating between among the producers that are part of the producer output cut agreement, then there is a prospect of oil prices falling. But we don't have at the moment a floor for prices. But I think it all will depend on what OPEC and non-OPEC does in terms of maintaining their output cuts.